Most stackers count ounces. They know exactly how many ounces of silver they own. They know exactly how many ounces of gold they own. They can tell you how many silver eagles are in their safe, how many ounces of constitutional silver they have tucked away, and how many fractional gold coins they accumulated over the years. And whenever the market moves, they immediately start calculating how many more ounces they can afford to buy. But I think that might be the wrong way to think about precious metals. I don't believe the goal is to own the most ounces. I believe the goal is to build a portfolio that reflects your own personal tolerance for the risk that is involved in each metal. Those are two completely different objectives because ounces tells you how much metal you own, but percentages tells you how much risk you own. Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph and I store 20% of my income in the form of rare coins and precious metals. One of the questions I get asked all the time is how much gold should I own compared to silver? Usually that question is followed by, well, the gold to silver ratio is doing this, the ratio is dropping or rising, so I should be buying more of these. And I understand why people are asking those questions. The gold to silver ratio has become one of the most talked about measurements in the precious metals community. There are countless videos explaining what the ratio is, what it has been historically, and what it might do in the future. And I do pay attention to that ratio too. I think it's a useful piece of information. But I think a lot of investors are using it the wrong way. The gold to silver ratio is simply the price of gold divided by the price of silver. In other words, it's the price of gold if you were paying for it in silver. And that's all it is. It's the relationship between those two spot prices. What it doesn't tell you is just as important. It doesn't tell you anything about premiums, and it doesn't tell you anything about what you actually own in your portfolio. These are very important pieces of information that the ratio ignores. And that's why I think sometimes people make some pretty big mistakes when they're just reacting to the market instead of managing their own portfolio. There's a very big difference. Reacting to the market means you're constantly asking, what should I buy today because prices have changed? Managing a portfolio means, has my portfolio drifted away from the level of the risk that I originally chose? Those are definitely not the same question, and let me explain what I mean. But before I do that, let me congratulate Cinda Abbey for being the first to comment on my last video. Thank you so much for your support. It really does help. So now back to the topic. Imagine there are two different investors. Both of them own the exact same stack, the same number of ounces, the same amount of gold, and same amount of silver. On paper, their stacks are identical. But one of the investors loses sleep every time silver drops 15 to 20%. The other one hardly notices. Why? It's because the issue isn't the ounces, it's the emotional impact of the volatility. Silver is an incredible metal. I love silver. I buy silver every single week. But silver is also far more volatile than gold. When silver is running, it can be incredibly exciting. When silver is falling, it can test your patience in ways that gold often doesn't. That's why I don't think the right allocation is the same for everyone. Some people can comfortably watch silver swing 30% without feeling the need to sell it. Other people can't. Neither person is wrong, they're simply different types of investors. And I think that's one of the biggest mistakes that we make in this hobby. We spend so much time asking what everyone else owns, we never stop to ask what we're actually comfortable with owning ourselves. Over the years, I've realized that my portfolio has to match my personality, not someone else's personality. Not the personality of the loudest voice on YouTube, not the personality of the person making the boldest predictions. It has to match mine. Because when the market gets emotional, I'm the one who has to live with my decisions. I don't get to borrow someone else's conviction. I don't get to borrow someone else's patience. I have to rely on my own. That's why I stopped thinking about ounces years ago. I've always found it more useful to think in percentages. What percentage of my precious metal portfolio is gold, and what percentage is silver? If silver has a really big rally and grows into a much larger portion of my portfolio than what I'm comfortable with, that tells me something. Not because I think silver's about to crash, not because I suddenly think gold is going to skyrocket, but because my portfolio no longer reflects the level of risk that I intentionally chose. The same thing happens in reverse. If gold dramatically outperforms silver and my gold allocation becomes much larger than I initially intended, I may decide to move some of that value back into silver. Again, not because I'm trying to predict the future, I'm simply bringing my portfolio back to alignment with my original investment philosophy. One of the reasons I think this approach is so important is because it changes the way you look at market movements. A lot of people see the gold to silver ratio moving and immediately think, what should I do? Should I buy gold? Should I buy silver? Should I wait? Should I sell? But when you think in terms of your portfolio percentages, the questions change. Instead of asking, what is the market telling me to do? You're asking, what is my portfolio telling me to do? That small change completely changes the way you approach buying and selling precious metals. You're no longer trying to predict the next move, you're simply responding to what you've already done. You're simply responding to what has already happened. And that's a much easier game to play. Predicting the future is near impossible. Nobody knows exactly where gold will be in 6 months, nobody knows exactly where silver will be in 6 months. There are way too many variables: interest rates, inflation, industrial demand, investor sentiment, government policy, geopolitical events. All of these things influence precious metals. And I don't want my portfolio depending on my ability to predict the future. I would much rather build a system that works whether I'm right or wrong about the next move. And that's what a percentage-based approach allows me to do. Now, let me talk about a real example of what I mean. Back in 2025, the gold to silver ratio moved above 100, and a lot of people started talking about how silver was historically cheap compared to gold. A lot of people were talking about trading gold for some silver, and at a ratio standpoint, that made sense. But what was more important for me was happening inside my portfolio. The percentage allocation of my holdings was telling me that I was heavy in gold compared to where I wanted to be. So I did make the trade. I traded approximately 0.89 ounces of gold into 90 ounces of silver. And if you look at just the ounces, it might seem like a strange trade. Why would someone trade gold for silver? Why would someone give up a precious metal that is typically considered more stable for one that is more volatile? But when you understand the purpose of that trade, it makes perfect sense. I wasn't trying to predict that silver was guaranteed to outperform. I wasn't saying that gold was a bad investment. I was simply bringing my portfolio back to the range that I had previously decided was appropriate for me. And that's the difference between rebalance and speculation. Speculation says, I think this is going to happen and I'm going to make this move. Where rebalance says, my portfolio has changed, so I'm restoring balance that I chose. Those sound similar, but they're completely different mindsets. Then, later in January of 2026, the gold to silver ratio had fallen significantly. It moved all the way down towards 50. Once again, I wasn't looking at the number itself, I was looking at my holdings. My percentages were telling me that something had changed. Silver had grown into a larger portion of my portfolio, and it was time for me to trade some silver back into gold. And that trade allowed me to trade approximately 115 ounces of silver into 2.25 ounces of gold. And what I find interesting about these examples is that 90 ounces of silver I acquired in the first trade had turned into a much larger opportunity. What's important here is that I wasn't trying to squeeze every possible dollar out of the market. I wasn't trying to time the exact bottom or the exact top, and no one can consistently do that. Instead, I was just following this process. The process gave me permission to act when my portfolio moved outside my comfort zone. I'm sure if I was obsessively watching the market, I could have timed these better and ended up with a little bit more gold. But is that amount of stress really worth it? To me, I don't think so. And that's the thing. I simply just have a plan and execute my plan. Every investor has different points where volatility becomes uncomfortable. For one person, a portfolio heavily weighted towards silver might feel exciting. They see the potential upside. They understand the risk and they're comfortable with the swings. For another person, the same portfolio would create constant stress. They might be checking prices every day. They might be wondering if they're making the wrong decisions. They'd be asking questions of whether or not they should sell or buy more. The metals are the same, but the difference is the investor's mindset. At the end of the day, precious metals investing isn't about having the perfect ratio. It's not about finding the exact bottom, and it's not about making the perfect trades. Those things are almost impossible to do consistently. It's about building a system that allows you to make good decisions over long periods of time. A system that keeps you from becoming too greedy when things are going well, a system that keeps you from becoming too fearful when things are going poorly, a system that allows you to stay focused on your goals instead of the emotions in the moment. So, next time you look at your gold and silver stack, I want you to ask yourself a different question. Don't just ask, how many ounces do I own? Ask, does my portfolio reflect the amount of risk I'm comfortable with taking? Because that question really matters. Ounces tells you how much metal you own, right? But percentage tells you how much risk you own. And once you understand the difference, you really start to look at precious metals an entirely different way. I'm interested in what you think about this topic. Do you think that percentages are a really good way to look at a portfolio, or are you fine just simply thinking about it in ounces? Let me know down in the comments. And if you like this video, make sure you hit the thumbs up button. Go into the comments to start a conversation or continue one. Subscribe if you haven't already, and share the video with someone you think may enjoy it. To my long-term subscribers, thank you so much for your continual support, and go check out josephsreserves.com for my merchandise, coffee mugs, the It's Today Again coffee, and my zip-up bags to hold your 90% silver. But most of all, thank you so much for watching, and just remember, every ounce adds up, so no matter how small, just keep stacking.